Hey everyone, welcome to the Juniper Links accounting channel. My name's Caroline and today we're going to talk about common allowable business expenses as part 4 of our limited company essentials course. So if you want to know what you can put through your company as an allowable expense or maybe a disallowable expense and what might happen if you do, then stick around for the rest of the video. Alright, welcome to our limited company essentials course part 4. We're going to cover common allowable expenses in this one. And I've already gone through a lot of these in a different video, but this time I'm going to go into a little bit more detail on certain aspects of claiming expenses in general through a limited company rather than listing as many possible examples. So what are allowable expenses? These are required or necessary to run your business. That's kind of like the gist of it, but I'll get into more detail on this. The usual wording is wholly and exclusively for the purpose of business and normally allowable for VAT and corporation tax. And generally speaking, if these are justified to HMRC, there will be no problem with trying to explain why you've purchased the item you're trying to get. So let's go to some examples of common business expenses. First one is materials or cost of sales. So these are products that are used up in providing your services. So for example, if you were providing IT consultancy services and you needed to provide cables to your clients, and let's say, you didn't get those rebuild or anything, or you couldn't get them rebuild as well, but let's say you needed to get these cables for them and some other equipment, like memory cards or whatever it is, and let's say that's part of your services that you're providing. So these are considered materials or cost of sales. So materials are generally things that are being used up in you providing the service. Office equipment like desks and chairs for your home office, that is totally fine. Computer software, email, web hosting, phone, internet, like all those sorts of things are absolutely fine, because in most cases, you will need access to these things for any business, so it makes sense that these will be allowable. Stationery, postage and printing. So stationery, obviously pens, paper, whatever you need. Postage, you need to send letters to other businesses or even to HMRC or whatever you're doing, that's totally fine. Advertising and promotion, or otherwise known as branding. So this kind of like falls into also branded t-shirts and things like that, or branded uniforms for your business. Anything that advertises your company. So for example, if you were buying Facebook ads, you were advertising on YouTube, you were generally advertising with sending out leaflets to people, any kind of advertising is an allowable expense because you're basically promoting your own company, trying to get more clients and ultimately more turnover and more profit. The other one is assets such as computer purchases, machinery. So I have starred these because these are not technically an expense. They do not normally just be expensed to the business. Instead, it will sit in the company accounts as an asset. As a general rule, let's say you bought a laptop for the company, £1,500 or whatever. As a general rule, you can claim the annual investment allowance, which is otherwise known as the AIA, and this lets you get all the corporation tax relief for that asset in the first year of trading. So obviously you have a limit of how much annual investment allowance you can claim per year, but for most single director companies, it'll be fairly standard to just claim it in the first year, which means it'll be treated almost exactly as if you added in a normal expense, because you'll get the corporation tax relief as normal, but it will be also depreciated in the accounts, and the shortest depreciation time is 2 years. So that value will be left in the balance sheet of the company. But that's all accounting stuff, so you don't have to worry about that too much. Just pointing out, certain asset purchases will not be expenses, they'll be listed elsewhere. Use of home allowance, now this one is just like a general allowance HMRC gives you. It's £4 a week or £18 a month, and this can be claimed without any receipts, and it's simply to go towards any electricity, water, things used up at your house that may have happened because you have conducted some business from your home address. Christmas party allowance is another interesting one. So you can spend up to £150 per head. Now this can be basically for company employees, and if you're the director of the company, you're normally also an employee, or at least in our case, it is that way. So what you can do is have a Christmas party. So you can invite the employee's partner as well, like a bring a guest type thing. And as long as you don't spend more than £150 per head, you can put that meal through as a business expense, allowable for corporation tax relief. Let's say you were a party of 2 people and you spent £450 on your Christmas party. That whole expense can no longer be put through the company. It's not allowed. You can only do it up to £150 per head, and if it goes over, then you can't claim it at all. So it's not an allowance you just get to add in regardless of how much you spend. It's literally like you can spend up to this amount, otherwise you just don't get it. Travel and subsistence, it's pretty self-explanatory, you need to get to client sites or between client sites, so train travel. And this is going to be anywhere you need to go that's not your usual place of business. So for most company directors who are also an employee of their own company, you will have a usual place of business, so somewhere that you hang out for the most part to carry out your services. And in the case of like an IT contractor, let's say you work from home 4 days a week or 3 days a week, your usual place of business is going to be your home address, which is most often your registered office address. When you have to go and visit a client site, you can essentially claim the travel costs between that client site and your usual place of business. If you think about it as an employee being sent to their client, like let's say you had a sales employee and they were going to travel to one of the company's clients that they're working for. Normally an employer would reimburse the employee for those travel costs to get to that client because that's not where they're contracted to work. So the same way as you being an employee and director of your own company, if you're sent away from your usual place of business to a client site, then you can get those costs reimbursed from your employer, which is your own limited company. And that's kind of how that works. And there is a rule on this because you can only do it up to 24 months at the same client location. So if you stay at the same client location or get a contract extension that takes you over 24 months, you won't be able to reclaim travel and subsistence anymore because that client site becomes your usual place of business as you're traveling to it all the time. So the same way employees cannot receive reimbursements from their own employer for commuting costs, you cannot do that from your own company either. Okay, moving on. What are some disallowable expenses? So there's 2 types of disallowable expenses. The first is disallowable for tax purposes. This normally means you can still reclaim the amount from your company, but your company won't get any tax relief on them because they're not allowable for that reason. And then there's the type that are disallowable by the nature of the costs, which will create a benefit in kind. So these are things like a personal expense. For example, if you decided to add in your personal home monthly rent as a business expense, that would not be an allowable expense. That is 100% personal, and this is because from HMRC's point of view, you would have had to rent that accommodation regardless if the company existed or not. And there are specific cases where this does not apply. For example, if you have 2 home addresses, technically one of them is not a home address. Technically, you've got 1 home address and you've rented another accommodation close to your client location if it doesn't make sense to travel between them every single day, and you go back to your main residence on the weekends, let's say. In that case, the secondary accommodation would be claimable through the business as a business cost because you had to relocate in order to provide services in that area for a bit. In that case, it's not personal expense, but in most cases, the nature of the expense will decide whether it's a benefit in kind or not. And the easiest example I can give you is something that is obviously a personal cost that cannot be put through the company, and it's basically like you're taking money from the company as income and paying for that cost, which is what this benefit in kind is supposed to do. So it's not wholly and exclusively for the purpose of business, and sometimes they can be apportioned for business and personal elements. In the case of rent, that is not the case. I get asked this a lot, and that's because, like I said, HMRC believes that you would have had to have that rental cost regardless if the company existed. The difference is, let's say you had something like a phone contract. You don't necessarily need to have a phone contract in general, but let's say you were using your phone quite heavily for business use, and let's say you had limited data or limited minutes or whatever, and that took you over your allowances, the actual business element. You can clearly track that that's happened, and you can clearly see how much of that has been used for business use, because the phone is not a necessity for yourself personally, but if you're using it only for business, then that's why you can put most of it through the company, if not all of it, depending on how you're using it. So here are some common examples for both of these types of expenses. So this is disallowable for tax purposes, and that is things like alcohol, business entertaining, so if you take clients out for meals, and gifts. So what you can do, your company can still reimburse you for these if you paid for them from a personal account. That's no problem. It just can't put this against a VAT liability. It can't put this against corporation tax. They will just be excluded. Certain gifts can be. It depends on what it is though. I recommend seeking some advice on that. Now, disallowable expenses, completely disallowable, which will just create a benefit in kind. Things like clothing, unless they're branded or safety equipment, of course. Groceries are just not allowable. You need them to live, so HMRC is like, that's not a business expense. Rent or council tax for your home, again, is because this would have existed regardless if your company had been formed or not or whatever. And any personal expenses, so like any kind of shopping, games, consoles, cutlery. I mean, like these are not, unless of course you're running a business that requires cutlery, but that's a different story. So I think you get the idea there. So expenses disallowable for tax. If paid for personally, your company can still reimburse you for the cost. What I mean by this is if you pay for a business expense through your personal bank account or cash, then your company can repay you for that. And it's not income, it's simply a repayment of an expense that the company should have paid for through the business bank account anyway. And this is just the proper way to account for it. This means you won't be out of pocket, which is nice. The company is not able to include these on the VAT or corporation tax returns. So again, they're just not allowable for tax relief. On the contrary, disallowable expenses that create a benefit in kind, you will essentially receive income based on the value of the benefit that you receive. And this is going to be taxed at normal rates like 20 and 40%, so almost exactly like salary. Your company must complete a P11D and pay the appropriate national insurance on the benefit in kind. Best practice in this case is just to leave personal expenses out of the business. In most cases, you're actually going to be worse off with the benefit rather than just paying the extra tax to take the money out to pay for the thing. But anyway, if you do accidentally purchase something that really shouldn't have gone into the business, the easiest way to remove the benefit is to repay the company immediately or as soon as possible to basically, it wasn't meant to happen. It was not meant to go through, so we need to remove that as soon as possible. And that's kind of like a quick guide to allowable and disallowable expenses through your limited company. In most cases, if it's required for you to carry out services or required for you to get more clients, and you are happy to justify that with HMRC if it ever gets questioned, in most cases it is allowable. There are obviously some very obvious disallowable expenses that you cannot justify regardless of what you want to do, like client entertaining, also alcohol, things like that. Those are like the banned ones for corporation tax relief. And of course, personal expenses will create a benefit in kind. And of course, you're welcome to justify whatever you want to HMRC, but ultimately it'll be up to them to decide whether that expense was allowable or not. And in most cases, if you got an accountant or if you have the service with us, we'll be able to inform you whether an expense would be okay for tax relief and if it's allowable, or not okay and you should probably not pay for that through the business, such as a company car in most cases wouldn't make sense, as the most obvious example. And I might get into that in another video. So that's pretty much it from me for this video, and I hope you guys found it really useful. Thanks so much for sticking to the end of the video. I hope you guys enjoyed it. If you did have any questions, then feel free to leave a comment down below and we'll get back to you as soon as we can. Otherwise, click that like button and also subscribe if you want to see more content like this. And for now, I hope you have an awesome day.